What's up, guys? It is Sam here, and I wanted to talk about my options trading that ended 2 days ago for the holiday week. And there is the portfolio value of $5,700. But before I do that, I wanted to give a little bit of context, and then I'm going to go over all the positions and trades that I had for that week, what I have still in my portfolio, and where we're going to be going next week. So, if this is your first time here, what's up? It's Sam, and if this is your second time here, thank you for coming back. So, I remember the first class I had. I was at St. John Fisher College, which is a small Catholic, and I'm not Catholic, school in Rochester, New York. Very small. And it was my senior year. And there was a professor that was teaching there, but also taught at the grad school that I ended up going to a couple, like the next year or whatever. And I learned about options, and this was back in maybe 2007 or something. And I thought they were so incredibly fascinating. I was like, these things, I don't know what it was, but you know those things when something just strikes you and it's like, holy fuck, that's so interesting. And so then you really start to dive into it to understand more the nuance of it, how they're, like, what an option is, the different types of options, like how to use options to make money, how other people can use options in their business. I still think there's a tremendous opportunity for options with blockchain to be implemented in a business setting going forward, 2019 and forward. I think there's a tremendous amount of opportunity there, or just things in the housing market, but to make it less cumbersome and less bureaucratic and costly in the process. Anyways, that's a topic for another video. So I was fascinated with them. I took a couple classes in grad school on them. If you've never heard of the CFA, it's a Chartered Financial Analyst. It takes about 3 years to get, and there's one exam per year. And each exam not only covers topics that were on the first, but it's building. So the first one, there's a lot of terminology and formulas and how to actually do accounting, both FASB and GAAP accounting, which are just the international standards of accounting versus the U.S. and the nuances between the two of them. So if you were looking at, say, Coca-Cola versus the Coca-Cola equivalent of Europe, and they're using the international financial, whatever it is, standards. Those standards have different nuances versus the GAAP, the generally accepted accounting principles here in the United States. So what are those differences? Because if you're going to compare financial statements, they're not apples to apples. So what you have to do is make the adjustments appropriately to be able to reconcile this balance sheet to this, or how the income might be recognized internationally versus how it's recognized domestically, so that you can get a more apples to apples comparison between the two. There's a bunch of nuances in how leases are, the differences in lease, or sometimes the depreciation, and these things might have to be added back in or taken out, or whatever the case is. Anyway, the CFA, on every single level, the most intriguing portions generally for me were the options portions. I was always super fascinated by the options portions, both in terms of how they were used, their growth over time, just every single facet around options. However, I never actually took the time to start trading with them. Then fast forward up until I think it was 2017, I opened a Thinkorswim, which is a broker platform for TD Ameritrade. And they allow you to do demo trades. Think of it like Monopoly type of money, but based on actual market prices. So that was a $50,000 balance, and within about 90 days, I grew that to $100,000. And I was like, this can't be that easy. There's something that I'm fucking missing. There's something that I'm missing. So I had some other stuff going on, and I didn't do anything else with options for a period of time. And then come March of 2019, that is when I decided to use my own money to start trading options. So The total amount that I've put in, and I didn't start with it, but over the first 5 weeks or so, I kept adding money. But the total amount that I've put in is $4,287. As you saw here, let's see if I can make this any brighter. As you saw right here, the total balance in the portfolio is $5,700, and I'm going to show you the progression. This is actually the progression over the past month or so. You might be asking why I only chose a month, because I just told you that it was March is when I started, and I can show you why. In the month of when I first started, I was trading much higher risk positions. So the only factor that I really cared about was just getting the most amount of profit. So my $4,287. Yeah, I don't know why I just transferred $87 in. I think I needed to complete a trade, so I just put in $4,700 or $4,287 because I needed that much to execute a trade. Anyways. I just wanted to make as much profit as possible per week. So there was times where I made over $2,000 in profit a week. And this is what it looks like. So there's not a 6-month diagram here. So I'm just going to show you this right here. So you can see that I've had the account open for quite a long time. By the way, this is Robinhood software. If anybody's interested, there's a link in the description. You get a free share of stock if you sign up and you fund your account. I use it because I love it. It's free. I've had a shitload of brokerage accounts. My girlfriend, she is using it now too. I just had my buddy sign up for it. Like, I like Robinhood. I think they provided excellent product here. I mean, there's always things to get better, but they're a relatively new company, and I think that fresh mindset coming into financial services is tremendously valuable, because it's such a legacy market with old traditional players that don't necessarily serve anybody other than high net worth individuals. And I don't mean that in terms of the SEC definition of high net worth individual. Just, I know that there's a shitload of people that barely have $5,000. So, and that represents a lot more people than the people who have, $50,000 or several $100,000. So having players like Robinhood come in, I think, is tremendously valuable. Anyways, so right around here, I don't know if it will pull up. So this is March 5th, which was right around when I started, but I started on March 10th. So I quickly went from right here, where starting around March 10th, up here to this peak. And I'm going to see if I can highlight this peak here. I don't think it's going to let me. But right there at the peak, I don't know if it's going to show the actual amount. Well, yeah, 10,500. So that's a little bit off the peak. So I actually ended up getting to a little bit over $11,000. And then if you follow along right here, I also dropped it and I lost all that. And that's because there was zero consideration for risk when I first started trading. And I lost all that over the course, I think, 5, 6, 7, 8 weeks, something like that. And went down to $3,800. So at that point, I was like, through that drop, I was like, I need to consider something. At first, I didn't really consider it. And then after maybe week 3 or 4, I was like, how can I learn from this? Like, what can I do to learn from this? And as I was that last week or two before things bottomed out, I was like, I need to reconsider the strategy of how I'm going to approach trading options if I want to have this be sustainable and profitable. So I decided to work towards making enough profit per week to be able to purchase 1 share of Tesla stock. And so Tesla is, by the way, I'm going to be doing a video on the sale of my business in Florida. So if you want to see the details of the sale, For the business in Florida, make sure you press that subscribe button. I also have a business in Florida. I'm in the process of selling it. So if you want to hear about all that, make sure you press that subscribe button. So that was about roughly 5 weeks ago. This way, I can do two things in terms of risk. First of all, the position size and in the moneyness of the position that I'm opening. By the way, 97% of them are just credit spreads, whether it's a put or call. And the vast majority of these, I can make the position size smaller and go further away from the money. So that's one portion of risk. Another portion of risk is taking some of that money off the table to diversify the entirety of the portfolio. So you might think, once I tell you what I'm putting it in, that it's not necessarily diversified, but from it helps hedge or reduce the volatility in there. And I actually have a plan going forward on how to increase that diversification. So every week, I'm trying to make enough profit to be able to buy one share of Tesla stock plus a margin of error. So this past week, I made $288 trading options. There was 4 positions that I had. Primarily, one position that made the most money, and that was a Tesla put credit spread that I opened on July 1st. So that is a bullish type position, meaning you make a profit if the stock price stays about the same or increases, or it can come down a little bit too, because I'm going further out of the money now. The premiums on Tesla are just grossly ridiculously high compared to other companies, so that's why I like trading Tesla. Plus I like Tesla as a company. So I had 2 contracts open for $166. So of the $288, $160 I made with that position, and I closed the position 2 days later. So I opened it on Monday before the 4th of July. I closed it for $6. So I received $166 and I paid $6 to close it. So that gives me a $160 profit. Another one that I opened up on Monday the 1st was the Netflix put credit spread. So that, again, it's below the market. It's a bullish type position where we want the price to either go up or stay about the same or even drop slightly. And the price went up immediately. So that one I actually had, again, 2 contracts. Most common, I like to open 2 contracts. I had 2 contracts, $43 each. So the total premium I collected was $86. I closed that position on 7/2 for $4 a contract, which is $8 total because I had 2 contracts open. So the total amount that I made on that position was, that I took in initially, was $86. The total amount that I paid out to close it was $8. I feel like it was $6 actually, but let's see if I can pull that up really quickly. So the total amount I would make is $68, but I actually thought I made $70 on that trade because I made a video earlier this week and that number comes to mind. That was on 7/2 that I closed that position. So I'm going to actually just pull it up right here and show you. Maybe it was $60 I made. So 43 times 2 is $86. And I closed it out for $16. Okay, that makes sense. Okay. I apologize for that little detour. I closed each contract for $8. So I sold it for $86 and then I purchased it back for $16. So I made $70 on that trade. Right? So you take the 2 of those, $160 plus the $70 I made there, and that puts me at $230. The next one, and these are smaller positions, I opened 2 contracts, Netflix call credit spread, so this is above the market. This would be a bearish type position where we want this price to stay the same or decrease slightly, because that makes it more profitable. Or it can increase just slightly, but decrease is what we want, or just stay the same. Basically, we just want it to stay below the bottom option there. And I sold 2 of those for $14 each. So that's $28 of premium I collected. On the 4 days later, so this is July 5th, I opened that position open on Monday. On the 5th, I closed that position for $2. So I'm assuming that I closed it for $2 each. That was the spread here for Netflix call credit spread, $2 each, yes. So basically I built a spreadsheet. I'm just verifying my information. These are all my trades in here. So if you come in here, it tells you the trade confirmation that I closed out the position at $4, which is 2 contracts. So each contract was $2 that I closed it out for. So I made $12 per contract, or $24 more on that position. So we were at 230, and what did I just say, 24, right? So 230 plus that puts me at $254. So I've made what 1 share of Tesla costs. Tesla's about $230-ish, $233 per share. So I've made enough to do that. On the 3rd, so those first 3 positions were all opened on the 1st. On the 3rd, I opened a Amazon put credit spread. So what is a put credit spread? Again, we want the price to stay the same or increase or even decrease slightly. So the decrease is only slightly, because then if it comes down too far, we start losing money. 2 of those, $18 each. So I received $36 on that one, and I closed it down on Friday for $1 for each contract. So the total profit I made on that was $34. That's what gives me the total of $288 that I made. If you followed along with the other videos I made this week, you may have noticed that if you come in here, I'm just going to try to show you this really quickly. This is the weekly portfolio value for my account here. And not sure what the fuck is going on. Back over here, you can see that it was 5,400. The fuck is happening with this computer? It's just, this is for adding dynamics to the screen here. So 5,400 over there, and then if you come out over here, it's 72. So you're like, how did you make over $300? I'm gonna close that. Over $300. And what happened is I have 2 other positions open. That is, I have positions open for a Tesla put credit spread for that are expiration in August 16th. So that should be right before Tesla's Q2 earnings call. I think that there's going to be a very positive announcement. So given my belief, based on my research and my analysis of Tesla, by the way, none of this is fucking financial advice for you to do any positions or anything like that. This is just what I am doing and what is working for me. I'm not saying you should do anything of the sort. You should fucking do your own research and don't do anything you're not comfortable with. If you don't love this shit, maybe you should just do index investing. Okay, so I opened up this position before the earnings call for quarter number 2. They had a positive earning delivery surprise number, more than what was expected. So I had already predicted that, and I thought that given that I believe that they're going to have a higher delivery number, which came to fruition, I think that their earnings and their sales are also going to be higher than expected. So that's why I set that out there. Remember, with the put credit spread, these are positions where we make money if the price goes up. So if the earnings are better than expected, you have the expected, what the market expects. If the earnings are better than what the market expects, and these are the legacy players in the market or analysts, which in my opinion don't necessarily have a full understanding of what's going on. And it's not nothing against them. Most of the time, I don't know these people, but more than likely, they don't have an incentive to be accurate. They're just going to follow the crowd. If you look at the data, that's what a lot of analysts do. They're very good at predicting the past. No fucking shit, right? That's what the research shows, but they're not good at predicting the future necessarily. So that's how I set up that position. So that position, given that Tesla over the week, this past week, rose slightly, that position started to make a little bit of money. So that's why the profit from the beginning of the week to the end of the week was over $300 because of that position. Also, remember, I've started this about 5 weeks ago in terms of the new strategy. And that new strategy, every week I take enough money off to be able to buy 1 share of Tesla stock. So I have 5 shares of Tesla stock. On Monday, I will be purchasing 1 more share of Tesla stock. So what happens if I'm holding 5 shares and the price goes up slightly over the week? I make a little bit more from that as well. So given that I made a little bit from the appreciation of Tesla stock and I made a little bit from this put credit position that I have for August expiration on August 16th, both of those added to the total. So the profit I made from the trading this week was $288. The total profit that I made on the portfolio this week, I actually didn't look at, so that is a fabulous question that I can pull up right now. So I started the week at, let's see, 54.23 and 10 cents. And I ended the week on Friday after trading at 57.42.58. So I made a total of $319.48 this week. Of that, $288 was from my trading this week. The other portion of that was from, as I mentioned, the put credit spread and the position that I have in Tesla. Now, you're like, how is that taking money off the table if you're just buying Tesla? Well, if the positions go down, right, like if I'm doing more put credit spreads, as you can tell by the positions, if that goes down, I'm able to purchase more of Tesla, but it diversifies away from the instruments that I am using in the market. And I don't know if this is going to be every week or every several weeks, how I plan on doing this, or maybe once a month. That 200 and change, whatever it comes out to be enough to purchase 1 share of Tesla stock, I'm going to be taking that money and purchasing some other stock. If you look at the empirical data, once you get about 30 shares